exempt this society from taxation. Like we talked about the mutual trading, that surplus will not be taxed. It's an exemption. So when it comes to the computation of the tax, that income will be exempted. And any other provision provided in that section, it will guide us. It will give us a clear guideline on how to do the taxation of the cooperative society. Then the other one, which is excluded, it is a society in respect of which the commissioner is of opinion a body corporate carrying off business for its own profit. So we say the SACCO, the cooperative society, basically the objective is not to make profit. They want to develop, or rather to benefit the members economically and socially. So if at all the objective or the commissioner, in this case the commissioner, the KRA, they feel that this cooperative, their aim, they are carrying out this business to make profit, so that one they will be excluded from this taxation of the companies, whereby they have some exemptions. So their income or the profit, it will be subjected to taxation. So we have some definitions so that we can understand the categories, the three categories that we have talked about. So we have the designated cooperative society. Designated cooperative society. So this one is a society registered under the Cooperative Societies Act. So we understand that designated cooperative society, it is registered under Cooperative Societies Act. Then we have the primary society. So the primary society, we say that this is whereby the membership is strictly for individual person. So it is registered under the Cooperative Society Act, but the membership is restricted to individual person. Me, you, so as the individual persons, we form the primary society. And this society has to be registered under the Cooperative Societies Act. Then we have the SACCOs. They are designated primary society. So we have explained the primary society. We have a group of individual persons. So SACCOs originate from that, the designated primary societies. So those are the three categories, and I hope they are clear now that we have proper definitions. And as we proceed, we have an attendance list that will be shared in the chat box. Make sure that you register your name. Yeah, you fill the attendance list that you are going to receive in the chat box. Fill in the details required there. Yeah. Then we have we are still talking under the taxation of cooperative societies. So under the designated cooperative society, other than the primary society, are taxed as per provision of Section 19A, subsection 2. So under the Income Tax Act, under this Section 19A, you can see subsection 2, how the designated cooperative societies, other than primary society. So that one is the key point. Other than designated primary society, how they are going to be taxed. So we have a form in which they are, how we are going to compute or rather calculate their taxable income. So we have the total income generated by that society for that year of income. So we are in the year 2024. So the total income generated by the society, either from which activity that they are transacting in. So they have been recording the income monthly. So at the end of the year, this income is considered. Then you less the aggregate of bonuses or interest and dividends declared for that year of income and distributed to its member. So I believe we all know this cooperative society, at the end of the year as members, we receive bonuses, dividends, and interest. So when it comes to taxation of the societies, the income that we earn, we have to deduct the bonus the dividends that we distribute to the members. Also to note, the bonus, interest, and dividend should not exceed the total income. So for instance, the income for this year was 5 million. You don't declare or claim that you have a dividend and interest amounting to 7 million. How did you obtain that? Yet the income was 5 million. So make sure that the dividends, the bonus, they are not above the income that you have generated for that year. So you have the total income, 5 million. Then you have the dividend, 3 million. So you deduct. The net is 2 million. So that one will be subjected to taxation. Or rather, it is the taxable income. And that one relates to the designated cooperative societies. We have said the designated cooperative societies, they are registered under the Cooperative Societies Act. So let's take note of that, how the taxable income is computed. Then when you go to the designated primary societies, we have seen the designated primary societies, it relates to the membership relates to individual person, and still they are registered under the Cooperative Societies Act. So these groups, the common feature, they are all registered under the Cooperative Society Act, but not the membership. So for the primary society, we can see the membership is restricted to individual persons. And to get a better understanding of the taxation, you can check the Income Tax Act, Section 19A, subsection 3. For the other one, designated cooperative, we have said it is in subsection 2. But for the primary, it is in subsection 3. So we can access that in the Income Tax Act to have a broader view or rather wide information concerning the taxation of the same. So to obtain the taxable income, we check the total income generated by the society for that year, just the same as the other category. So the total income you have generated for the whole year for this society. Then we less the bonus, interest, and dividends declared for that year. And also note that this dividend and interest, you have declared them, but you must distribute to its members. Don't just declare that you have dividends worth 5 million, but you have not distributed them to the members. So for better taxation or computation of that taxable income, these dividends, they should be distributed to the members. And also note that once you distribute them to the members, you should be aware that there is a taxation which is subjected to them. That is withholding tax. You should withhold tax before you distribute them to the members and remit that tax to KRA. And the next section is about the payment of dividends, whatever I've just explained. So the cooperative society, either it's the primary or the designated cooperative society, they pay their members interest, bonuses, and dividends. So at the end of the year, there is an interest or a bonus and dividends that you're going to receive. So these dividends, they can be either in cash, you receive money as a dividend or bonus, or share dividend. You can receive shares in your share capital account as dividend for that year. So those are the two forms of payment of dividends. Then the cooperative societies are required to withhold tax on the dividend payments. So these dividends that you have set aside to distribute to your members, make sure that you withhold tax, that is 5%, and remit to KRA before you distribute them to the members. So failure to do that, at the end of the year, you come in here to prepare your financial statement, and we can see clearly that you had dividends, 8 million, but there is no tax that you have withheld. So you have not compared the tax law. So during an audit, KRA will still come to demand for that withholding tax that you're supposed to pay to them. And at this point, you have already distributed to the members. So you'll go back to your pocket, or rather to the account of the cooperative, and draw money so that we can pay to KRA. So that one will lead to loss to the company because it's like double payment. You already paid the member that dividend, even the portion that you are supposed to remit to KRA. Then now KRA has come and they demand the portion of that dividend that we are supposed to withhold tax and remit to them. So we should be compliant and make sure that before we distribute these dividends to the members, make sure that we withhold tax and remit to KRA. So we have a summary of the categories of those societies under the Section 19. So basically, when it comes to that taxation of the cooperative society, it is contained in Section 19. So we have designated cooperative society. That's the major component. Then it is divided into two. We have the primary designated cooperative society. Then we have other designated cooperative society. So those are the subcategory resulting from the designated cooperative society. Then from there, under the primary, we have two categories. We have designated primary society, registered and carrying on business as a SACCO, and those that are not carrying on business as a SACCO. And remember, we talked about the primary designated. We said that the membership is restricted to individual persons, and they should also be registered under the Cooperative Society Act. So if your society is not registered, that one is not in existence. It's not existing under the law. So make sure that we register our societies. So we have, that's the classification of those societies. So we have another aspect, which is the BOSA and FOSA. I believe we have heard about this, maybe even in class, if not in the career world. In class, we learned about that. So we can start with BOSA, that is back office service activity. So for the back office, this is whereby basically we have deposits and savings. So you make deposits as members and you access credit, to access loans out of the deposits that you have made. And for the BOSA, there is no withdrawal of your savings. So you cannot withdraw. You have just made deposits, but you cannot withdraw. So that's the key feature for this BOSA. You cannot withdraw your savings, but now you can borrow from your saving account at a given rate. So at this rate, it will enable the society to earn income. That is the interest income from these borrowings that you get. The other feature is earning dividends on interest on the savings. So we have said that we just make deposits and access credits. So at the end of the year, your savings, they have earned an interest, and also you have earned dividends that they are going to be distributed at the end of that accounting period. For you to access loan under this back office activity, you need to have a guarantor who is a member of this society. So the members themselves, they guarantee others so that they can access loan as a security. In case this member that you have offered guarantorship fails or defaults to pay this loan, you're going to be liable. You are the security as a guarantor. And for you to be a guarantor, you must be a member of that society. So those are the features for the BOSA. So we have to note there is no withdrawals. You just make deposits and you can access credit. You earn interest on the savings that you have made, and also you earn dividends, which are going to be distributed at the end of the year. And remember, we said about the dividends, you should be withholding tax and remit to KRA. Also, you need to have a guarantor for you to access credit, and this guarantor should be a member of the society. Then we have FOSA, that is the front office service activity. So it's opposite of the BOSA. BOSA was the back office, but now FOSA is the front office service activity. Excuse me. So it's the opposite of the BOSA. So for the front office service, they offer services to the members, just like the commercial banks, the banks that we that we transact with. So the services under this, they are similar to those commercial bank, like processing of salaries. So I believe we receive salaries, our salaries through the bank. So the same way happens under the FOSA in the cooperative society. Then there is cash transfers. You can make deposits and withdraw funds. So under the post services, you cannot withdraw your savings. But now in the front office, you can withdraw those funds, and also you can make savings. It's also another saving avenue. So you can make savings, withdraw, cash transfer, and processing of salary. So basically the FOSA, it works like the normal banks that we have. So that's the difference between the two, the bank office and the front office service activity. So we have different case laws to explain the taxation of the SACCOs. So our case law number 1, it is an income tax appeal number 4 of 2013 between Muramati Sacco versus KRA. So the case or the judgment was being based on whether or not the income that was assessed from FOSA activities was excluded as was contemplated under Section 19A, subsection 4A of the Income Tax Act. So we have said about the taxation of these cooperative societies. You can find that in the Income Tax Act, Section 19. So in this case, this Muramati Sacco, it had the FOSA, the front office activity. And the front office activities, we have just described them. So the case was concerning the income that was being generated from those activities. Was it excluded as contemplated under Section 19A, subsection 4 of the Income Tax Act? So in your free time, you can just research on this Muramati Sacco versus KRA Income Tax Appeal number 4 of 2013. You're going to see all the details pertaining this case, where it all started to the final judgment. So we can get to see what happened. So bearing in mind the definition of a SACCO business against the backdrop of the provision of Section 19A of the Income Tax Act, the court found itself in agreement with the respondent that not all income generated by a cooperative SACCO could be deemed to be for the mutual benefit of its members. So we talked about the transactions in the SACCO. We can have the mutual trading whereby you transact with the members to benefit this member. But then I said, we get to a point whereby we allow the non-members to come and transact. And now this income being generated from the transaction with the non-members, it's not exempted. It should be charged to tax. So in this case, the court, which was acting to determine this, the judgment, it was in agreement that not all income that was generated from Ramati Sacco, it was to be deemed to be for the mutual benefits of its members, basing on Section 19A. However, interest from a member would be excluded as seen in Section 19A 4A of the Income Tax Act and would be deemed to be for the mutual benefit of the member. So that's basically it's talking about the income that was generated from the non-members or the members of the Muramati Sacco. So we can research on that case to get to see all the details relating to that and the judgment that was passed. But this section of the Income Tax Act is talking about the income. It should be exempted if it was for the mutual benefits of the members. But if it was not for the mutual, there is no mutual trading, it should be subjected to taxation. Then we have our number 2 case law. So we can note this down, the headings of these cases, so that we can research on them on our free time and get to see the details pertaining them. So the income tax appeal number 6 of 2013, it's between Nyeri Teacher Sacco versus Commissioner of Domestic Taxes. It was to determine whether the income from the front office activities is mutual in nature and therefore not liable to taxation. I believe by now we have understood the mutual aspect. So if the activities were mutual, they are exempted from taxation. So this case was to determine whether all those activities in the front office, they have the mutual aspect in it. By the mutual aspect, we mean they are there to benefit the members, but not for benefits. As correctly stated, the various statutes and regulation permit the applicant to carry out what it calls both activity. Those include receiving deposits and onward lending. Those are strictly within its aims and objectives, and therefore would benefit from the special tax position provided to mutual society. So we have talked about the BOSA, and in this case, the Nyeri Teacher Sacco, it was having the BOSA activity, that is the deposit and lending loans to its members. Out of this, they are operating with the society is between the society and the members. So the income, it is under the special tax position. It's exempted, provided there was the mutual nature. Then paragraph 15. However, when it comes to the front of office activities, those could be more akin to commercial banking. So for the commercial banking, it's more of the profit-making aspect. So in case this Nyeri Teacher Sacco was involved in the front office activities, whereby there was those commercial banking services that we have said, the salary processing, cash transfer activity. We have to study this case law so that we can have a better understanding of the taxation of the SACCOs. The number 3 case law, it's on the income tax appeal number 36B of 2017. It's between Sheria Sacco Limited versus Commissioner of Domestic Taxes. So the judgment was based on the loans advanced by the Sheria Sacco during the accounting year in issue was strictly and exclusively advanced to the appellant's members, and to that extent, whether the interest income arising from such FOSA loans advances was exempt from taxation under the provision of Section 19A of the Income Tax Act. So basically, this case law, they want to show or to prove the mutual nature, the mutual trading. If at all these activities were not in the mutual aspect, there was a profit-making aspect, they'll be charged to tax. So in response to that, in paragraph 18, the tribunal, that is under the judgment, it will be recalled from the produced judgment above, made a finding, which finding is a consonance with the High Court decision, Muramati case, Supreme, that FOSA loans when strictly advanced to members, interest from such loan advance fully benefit from the provision. So basically, it's on that. The benefit, the interest being earned from these loans, they are to benefit the members as given in the provision of the Income Tax Act, Section 19A. So that's what the case law are all about. So we can research and see more about the Sheria Sacco and Commissioner. Then there is Nyeri Teacher Sacco, and there is Muramati Saccos. So we can get to see those different cases and see how it's appeared and the judgment that was passed. And we can be in a position to tell, was it a mutual trading aspect? If not, it was supposed to be subject to taxation. So this one is a continuation of that, the last case that we did, the Sheria Sacco versus the Commission of Domestic Taxes. So you can just proceed to read it and see. So the tribunal is upon due consideration of the entire set of the pleadings and documents filed before it, and the submission of the parties on record found that the appellant, that is the Sheria Sacco, has failed to discharge its burdens of proof under Section 30B of the Tax Appeal Tribunal Act, number 40 of 2013, in proving that the tax decision on the corporation tax arising from interest income on fossil loans in respect to the year 2011 and 2012 ought not to have been made by failing to demonstrate that the interest income in issue allows for fossil loans strictly and exclusively advanced to the member of the appellant. So depending on the appellant is Sheria Sacco, they were requested to prove that the income from those fossil loans, they had the mutual nature, but they failed to produce the proof. So if you fail to support these claims, whatever you are claiming, if you fail to support, it cannot be in your favor. So you still fail. So the SACCO failed to produce before the tribunal evidence that no fossil services were extended to non-members, as provided in the policy and procedure manual. So in this case, the commissioner was claiming that Sheria Sacco was giving services to non-members, and we said that income from non-members is subjected to tax. So in the year 2011 and 2012, the commissioner issued a notice to them. They want to verify these transactions, what the services offered to non-members. So you as the taxpayer or the cooperative, you need to support your claim. You have claimed that the services were just for the members only. Support that. This income that was generated, support how it was generated from the members. So failure to support that, it will be an issue. So all the SACCO needed to do was to produce evidence of those who had accessed fossil services and thereby prove that those who accessed were members of the SACCO. So those who had those services, they needed just to give a list of those members, and from the list and even from the registration document, we can see whether they are members of the society. So if not, there was the tax implication. And more so, the SACCO failed to produce the evidence as requested by the commissioner. So, and that's all for the 3 case laws. So we can research on that and see the wider coverage of those 3 cases. We have Muramati Sacco, Nyeri Teacher Sacco, and Sheria Sacco versus the commissioner. So make sure at our free time we can check on those cases. So that's all about the overview of the cooperative societies and how they are being taxed. Now we can get into the taxation aspect of the SACCO. So we have three taxes related here. We have the pay-as-you-earn withholding tax. We touched on the withholding tax in respect to the dividends being distributed to the members of the society. Then we have the corporation tax. That one we have checked on how the taxable income is being arrived at. We said it's from the income generated. You less the bonus, interest, the dividends being distributed to see that on the different taxes. start with pay as you earn. I believe we all know about the pay as you earn, and for those who don't have a clear picture of the pay as you earn, we can briefly discuss that. And these taxes, they affect the SACCOs, the microfinance, because we all know that in these SACCOs we have staffs or we have employees and they receive salary at the end of the month. So this tax affects them. So pay as you earn, it is a tax levied on all employees on a monthly basis on their salary. So the salary that we receive, it should be subjected to pay as you earn. And as the employer, make sure that you have the pay as you earn obligation so that at the end of the month, you can be filing your returns for that month and submit the tax charge to KRA. We have the obligation, that is the pay as you earn, should be deducted and debited by the employer. It's your responsibility as the employer to deduct tax and debit to KRA. Like me personally, Mary, it's not my responsibility at the end of the month to file. So it's the responsibility of LWK to ensure the month they have been deducted the pay as you earn and it has been limited to KRA. So take note of that. Then the taxation, it is based on graduated scale and the minimum or the threshold is 24,000. So those earning 24,000 and above, there is tax to pay. But anyone earning 24 and below, there is no tax to pay. But it's good to include all these employees, even those earning 15,000. Make sure that you include them in the payroll. They are appearing in the pay as you earn. There is no tax implication, but at the end of the year, you can be able to account for your salary and wages expense that you incurred. So when filing the returns at the end of the year, you want to claim your salary and wages expense to be 6 million. But once we check in the pay as you earn submitted, you just included those employees earning 50,000 and above. So we get to see you have 2 million. So you have to prove KRA. So you have to give supporting documents. And we have seen from that case that we have checked, they failed to support those claims. The same case it will apply to this pay as you earn. You have the salary and wages expenses 6 million, but from the pay as you earn, we can just see 2 million. So we need to account for that entire expenditure. So make sure even those employees whose salary has not reached the threshold, they are part of pay as you earn in the monthly returns. Then we have a penalty. We have a penalty for late filing and also for non-filing. So the penalty is 10,000 per month. So if you fail to file your pay as you earn returns on time, there is a penalty for 10,000. Also, if you fail to file completely, you find that you have the pay obligation, but from January 2023 up to date, you have not filed even a single transaction. So that one, there is a penalty each month of 10,000. So let's be compliant and observe the timelines. So pay as you earn, it should be filed and paid on or before 9th of the following month. So today we are in date 18 of September. So the pay as you earn for September, it should be filed on or before date 9th of October. So you have between date 1 to date 9 of October to submit those returns. So prepare your payrolls on time and make sure that you file the returns on time. And also check on the accuracy when filing. Then we have a relief, the personal relief under the pay as you earn. It is 2,400 per month. That's why we said a person earning 24,000, there is no tax to pay because under the graduated scale, the first tax bracket is 10%. So 24,000, 10% of that is 2,400. Then you have been given a relief. So it's a tax reduction of 2,400. So it will be 0. That's why we said the 24,000 is the minimum threshold. So when filing, we be accurate and ensure we have considered this relief, because you can find that you have this. Okay, this relief is for It's for everyone, for resident employees. But when filing, you never considered it, so your tax will be higher. It's an incentive from the commissioner to reduce your tax liability. So let's utilize that. And also currently, we have other reliefs apart from the personal relief. We have the insurance relief on a monthly basis. This one relates to the NHIF. It's 15% of the NHIF contribution that we make on a month. So if you are contributing 500 or 600, depending on the contribution bands that we have, make sure that you subject the same to the pay-as-you-earn effect that relief that you have on the insurance, and it will assist in reducing your tax liability. The other relief we have is the affordable housing relief. I believe we all know about the affordable housing. It's still effective. We continue limiting the same. So it's charged at 1.5 of your salary, but we have a relief of 15% of that contribution. So make sure even in 15% of the contribution you have made to the housing levy, it will reduce your tax liability. And withholding tax like any other taxpayer. So there is no special provisions for a SACCO since it does not fall under the Income Tax Company Act, Income Tax Company Act. It's fall under the Cooperative Society Act. But when it comes to the pay-as-you-earn withholding tax, there is no special provision. So make sure you charge those taxes appropriately. So we have some areas of interest in the pay-as-you-earn under the SACCO. We have the committee allowance payments. We have the payment of bonuses to staffs or board members, motivational payments made mostly on recruitments of new members, and any other allowances. So this is an area of interest because we know in the SACCOs, we have the committee members, and every time they have maybe a meeting, they receive allowances. We have the bonuses that we pay to the staff at the end of the period, even for the board members, the bonuses we give them. Make sure that these allowances, these bonuses, they are included in the computation of the pay-as-you-earn. When filing the pay-as-you-earn, make sure apart from the basic salary, you have considered all the allowances that you have given to the staff or the board members and the committee, because they should be charged to pay-as-you-earn tax. Failure to do that, at the end of the year, you come and claim the committee allowance of 2 million. We had bonuses that gave your staffs for 3 million. They'll still be charged to tax. So let's take note of that. We document all this. We have those schedules showing the allowances that we have given to the committee, the board members, and we include them in the pay-as-you-earn returns filing. The other tax is the withholding tax. So we talked about that on the dividend. We also have the withholding tax on professional services, like audit service. We also have consultancy. Those services are subject to 5% withholdings, and it should be deducted at source. Before that means before you make payment to the supply of that service, make sure that you deduct the 5% and remit that to KRA. So you had a consultancy and you gave that person 200,000, but you have not withheld. And at the end of the year, you claim that expense, consultancy, 200,000. So during an audit, KRA will demand 5% of that. And you have already paid the service provider. So it will be a loss to you because you'll pay it again. So it's like double payment. So let's make sure that all those services subjected to tax, we have complied and remitted the same to KRA. Under the SACCOs, the area of interest on the withholding is basically on the dividends and the professional services that we have talked about. So these dividends that you distribute to your members, make sure that we withhold the 5%. and limit to KRA. Before even you distribute the payment, the dividends to them, we hold the 5% and limit to KRA. The other tax, we have the corporation tax, that is taxation of the SACCOs. So initially we had talked about that, how to determine the income, the taxable income under the designated societies and the designated primary societies other than SACCOs. So still on the taxation, no, we have the corporation tax. That's the tax at the end of the year for these SACCOs at the end of the accounting period. So the key focus that we have talked about is about the mutual nature of the income. The income generated, was it derived from the members or non-members of the SACCO? So if at all it was from the members and there is the evidence of the mutual concept, it is exempt from taxation. But if you have non-members, or rather you are investing in other activities that are generating income, this income is not mutual, it's not mutual income. So it will be charged to tax. So the taxable income of SACCOs is calculated as follows: 50% of gross income from interest, other than interest from its members. So take that note. We say that interest from the member, it's under the mutual concept, so that one is exempted. So any other income or any other interest, the 50% is considered in the computation of the taxable income. Then we have gross income from any right granted for the use or occupation of any property, not being a royalty, ascertained in accordance with the provision of this act. We are talking about the rental income. So you have a property, you own a property as the society. So, and you have given a right to use that property or to occupy it to another person. So you are generating income from this property, that is the rental income. So this rental income is subjected to tax, and it's the entire income, 100%. Then we have gains chargeable to tax under section 3, subsection 2. That is the capital gains. We're going to briefly talk about the capital gain tax. So capital gain tax, all these gains, it relates to the transfer of property. You had a property, like a building, land, and you have transferred, you have sold that. So any gain resulting from that is still subjected to tax. Then we have any other income, excluding royalties, chargeable to tax under this act, not falling within subparagraph A, B, and C. That one relates to the mutual aspect, ascertained in accordance with this provision. So we have any other activity generating income for you as a society. We have farming. So you have you are doing farming as a society, and you're getting income from that farming. So it is chargeable to tax. You have income generating from that activity is still subject to taxation. So take note of those aspects that are considered in the computation of taxable income for SACCOs. Then under section 19, it excludes from taxation interest income from members. And you can see from our point number 1 here, we had said 50% of gross income from interest other than interest from its member. So generally, interest from the members is exempted from the taxation. Under section 19A for subsection B, all expenses that are wholly or and exclusively incurred in the production of rental income are now allowable. So allowable expenses, you can deduct them in the computation of taxes. And we have said that income from the rentals is chargeable to tax when it comes to the SACCO. So any expense that was exclusively incurred in that, it is an allowable expense. So SACCOs are taxable on their investment income, separate from their rental income, and separate from other income obtained or earned from their trading activities, according to section 15, subsection 7. So this one, the treatment is just the same like the normal corporations. We should separate the different incomes that we receive, either farming, rental, business. The same way applies to the SACCO. Separate those income that you have received: investment income, rental income, interest income from non-members. So they should be treated separately. Such separation may result to some activities being in tax liability and others in loss, since the losses of one activity cannot be offset against the gains of the other. So when we separate these income from different activities, the taxation will be considered separately. So you can find from the rental income, you're making profit, but from farming, you had a loss. So each stream of income will be treated separately. If we have done the normal returns for the normal company, we have seen those different categories of income when filing the return. So it applies to this. Each category or each stream of income, it should be treated separately. Those expenses incurred in that activity, they should be deducted in the respective category of income. And this one will facilitate to fully disclose all the income that you have and for that accounting period. Then the other tax. So we have looked on the pay as you earn, withholding, corporation tax, and the capital gain tax. So we had briefly talked about that. So we can see what the capital gain tax talks about. So, and I believe we are still asking questions and you're getting responses in the chat box. And so far, I believe there is no one with an issue. In case even it's an issue with connectivity, make sure that you raise that issue so that we can address that. And also make sure that you fill the attendance sheet. Yeah, so don't claiming maybe I was in the make sure that you fill in that form and all the details that you have been requested to fill in. So for the capital gain tax, it is levied on transfer of properties situated in Kenya, acquired on or before January 2015. So this property you have a building, you have land, you acquired that on January 2015 or before. So the capital tax applied to that. Once you do a transfer of that property, you should be charged tax on the gain, just as the name suggests, the capital gain tax. That gain, whatever you have gained, it is subject to taxation. It is declared and paid by the transferor of the property. So you, the seller, you, the one that was transferring this property, you are the one who should pay the capital gain tax to KRA. And when generating or making this payment to KRA, you fill in the details even for the buyer. So at the end of the day, KRA has the record of who bought this property. So that's why you find during the tax audit, you have received a letter saying, in the year 2015 or 2017, you filed your returns to be nil return, no income, no expenditure. But on the same period, you bought property from taxpayer ABC. So you wonder where they got that information. It's from this. So the question there is, where did you get the money to buy this property? Yet from your return, you filed a nil return. Cautious when doing this. So we have said it is declared and paid by the transfer of the property. So the rate of tax has changed from 5. Initially, it was 5 to 15 of the net gain, effective January 2023. So before January 2023, the capital gain tax was being charged at 5%, but currently it's at 15, so it has increased. And we're talking about the capital gain tax because we find that the societies, the members, they have invested, they have bought properties, and now it has come time for them to sell or transfer these properties. So they are affected by this capital gain tax. So it is a final tax. What do we mean by a final tax? So the capital gain is not subject to further taxation after you have paid the 15% rate on tax. So you have transferred this property today, being September, and you have paid the 15% on the gain. So at the end of the year, we do not expect you to come and declare this income or this gain again as part of your income. So that's what we mean by a final tax. So, and how do we obtain the net gain? We have said that it's charged on the net gain. So the net gain is the sales proceed minus the acquisition and incidental cost. So you have sold this property at 10 million and you acquired it at 5 million. So the profit is 5. So you still have to deduct any incidental cost, any cost that you have incurred in this process of transferring. There was the surveyor valuation that was done, all those costs that you incurred, make sure that you deduct so that you can get the net gain. So the net gain after you have done all the deduction is the one that is subjected to tax. So CGT is on gain arising from sale of property. So we note that it's from the sale of that property. So that's on the capital gain tax. Now we have the rental income tax. So on the corporation tax on the SACCOs, we say that they can be having another stream of income as the rental property. So you have the rental property as a SACCO, or the members of this SACCO. So you're supposed to declare this income and file returns. So the rental income, it can be a residential property. In case of a residential property, we are expected to file return monthly rental income tax at the end of every month, and it's a rate of 7.5. So you gained this month you gained a rental income of 5 million. So you're supposed to pay 7.5 of that income, and no expenses are deducted on that when it comes to the residential property. It applies to the income between 288,000 and 15 million per annum. So if at all in this 1 year, your income is between 288,000 and 15 million, you are supposed to comply with this rental income. But in case your incomes exceed 15 million, there is a special provision whereby you can declare that at the end of the year, and it is being treated as a normal business income. So that's a special provision in case your income exceeds 15 million. So rental income above 15 million per annum is taxed at either individual graduated scale or corporate rate of 30. For an individual, we use the individual graduated scale at the end of the year. So the normal will apply under the rental income. Then in case of a company or a corporate having the rental income, it will be subjected at the rate of 30%. So we have another aspect of the pitfalls and the success of a SACCO, or basically the failure and the success of a SACCO. So under the success, what contributes to the success of this cooperative society of a SACCO is that having a strong governance. Those they manage the qualification, they have the skills to lead these the members. Then we have member engagement. Once you engage in your member in decision making in the operations of the SACCO, it will contribute to the success. All the operations should be running efficient. Then we have innovation or adoption of technology. So that one will success. Adopt the new technologies that are coming up. So we have a phrase there: if you fail to innovate, you die. So make sure that we embrace the new technologies that are coming up in our companies, in the SACCOs, so that it will promote to growth and success. Then we have proper delinquency management. So for the delinquency, it relates to the defaulting of loans or failure to pay the loans on time. So SACCOs, they deal with lending. Failure to failure to repay the loan, it will affect the operations of the company, and we have the credit risk that will face the company. So for your SACCO to be successful, let's make sure that we have those measures put in place to ensure that we have received the loans repayment on time and accurately. Then we have effective risk management. We talked of the different risks facing SACCOs. So we should be having measures to manage this risk. Any risk that we have that is facing us as a SACCO, have measures in place to mitigate it. In case of a reputation risk, how can we handle that? In case of a credit risk, liquidity risk, how can we handle that as a SACCO? And then strong saving culture to expand the capital base. So if we are dealing with lending, we still need to have that capital so that we can have money to lend out to our members. So we need to encourage the members to save. We should be having a good saving culture in the SACCO. Then regulatory compliance. We have the laws and regulation governing the SACCOs, even the tax laws. Let's make sure that we comply with those given laws. We have the failures, those aspects of the activities that contribute to failure of the SACCO, pressure to expand and pressure to give dividends. So you want to expand your operations and give high dividends to the members, but you don't have that capacity to do that. So that one will affect the operation of the SACCO, and it may lead even to the solvency of the SACCO. Changing market dynamics, we say that different marketing conditions, the changes affecting in the external markets, they affect the operation of the company. So those conditions, the changing conditions in the market, once not handled well, it will lead to failure in the SACCOs. Then exit of senior citizen membership, that's also another issue. So we should take caution. Also analyze reasons as to why. If we find that the senior citizen membership are exiting, analyze and see the reason contributing to them exiting. If it's something that you can work towards that to avoid them, make sure that you do that to prevent more members from exiting. Subjective lending model. Once you are dealing with lending on the savings that you have received, have a proper lending model. How do you account for that? Are the interest rates okay? Are they something considerate? Is it something worth that will generate interest for the SACCO? Retrenchment that decreases deposit. Yeah, we are operating using this deposit that we receive from the members. So retrenchment will lead to an issue. High delinquency for mobile loans. We talked about delinquency in the success factors. So failure to repay the loans on time, it will constrain the SACCO, leading to even collapse of that SACCO. Non-compliance with the regulation, it's also another failure. So we need to check out on those laws and regulations that are set out. Anything that is changing, let us be updated on the changing laws and regulations so that we can comply. Then poor governance. Those in the governance, the management, they don't have the qualification, the skills, and even the capability to run the SACCO. So it will lead to a failure. Then lack of proper record keeping. So the proper record keeping, we have been talking about this. So even SACCOs, they need to maintain proper record keeping. Each and every transaction happening in the SACCO, it should be maintained properly and have enough evidence that the transaction has occurred. Yeah, so basically those are the factors contributing to the success and failure of the SACCO. So I believe we are still together and you're getting responses to your questions in the chat box. So the other item under our content, it was the tax audits. So here we can check on the audit triggers. What triggers this audit from KRA? So we have non-filing and late filing of returns. As a SACCO, we have these tax obligations that we should be filing and emitting to KRA. So non-filing and filing late, it will trigger the taxman to come and assess your operations to see what's happening. Then we have IFMI system used by the government to pay its supplier. So if your records is interest in the IFMI system, this one can lead KRA to come and check whether there is full disclosure in those transactions between you and the government. So let's make sure if at all we are involved in any transaction with the government, we have fully declared the income that we receive and it is being subjected to the taxation accordingly. Then significant variations in amount declared in the tax. We have talked about the pay as well, the salary and wages, the expenditure. Whatever you have filed in the pay as one, and also at the end of the year, whatever you have claimed as your salary expense, they should be corresponding, no variance. In case of a variance, it will trigger an audit, and you will end up paying the tax on the variance. Then we have continuous losses by a company. So each and every year you are reporting a loss in your financial statement. That one is also another trigger. Industry trends versus specific company profits. So the industry that you are dealing in, there is those trends, the trends that are happening. So we expect this company, this industry, to be reporting a certain amount. But on the other hand, whatever you are reporting as a company, your profits, they are not in line with the industry trends. So it's a trigger. Business restructuring. Then we have third-party information. So information leaking the taxman from an external party, not even the SACCO itself. It's also another trigger. They want to come and verify this information reaching our desk. How valid is it, or other? Are there any transactions happening in this company that are not illegal? So the information reaching the taxman, it's also trigger the audits. Excuse me. We have media attention of a company. So media attention, it has both positive and negative effect. So too much attention being in the public, every day you are in the media. So that one is also another trigger that we need KRA to come to you to audit. Current or former employees giving out information. So your employees, either those who resigned or even those who are currently in, they are delivering information to KRA. We have the whistleblowing aspect. It's allowed that whistleblow any activities that you find happening in your company. You can take that information to KRA. So those are the triggers resulting to KRA audits. Actions to take during an audit. So you have received a letter by KRA that they want to come and verify or to audit. Okay, they say they want to come and verify different aspects in your financial statements. So once you receive this email or this letter from the commissioner, what do you need to do? You have to understand the time frame given by KRA. They always communicate in that email. The email has been delivered to the 18th. They have given you 14 days or even 7 days to respond to that email. So we should understand the time frame and respond immediately to KRA. Evaluate the information required by KRA. In that letter, they have stated whatever they want. They want to assess your sales for the year or even for 3 years. What do they require? They require the bank statement, the sales invoice, or even the payroll, the wages schedule. So understand each and every information required by KRA. Carry out a pre-audit compliance check. So they have issued a notice they want to verify your returns for the last 5 years. So you should engage an auditor to do a compliance check, or rather a tax expert to do a compliance check, so that you can see your tax position even before KRA comes. This is what I expect to happen. an opening meeting. So anytime that you're being summoned to visit KRA, make sure that you attend. Have that opening meeting with the team to see what they expect from you, what's the objective of this exercise, so that you can have a clear picture what to expect during this audit. Assign a contact person from your finance team to be the contact person. So you have assigned Mary to be the contact person. So anytime KRA officer comes to your company or they have communicated, Mary is the one who should be responding to them, because I might be having the required information, but once they communicate and find maybe David will provide a different information which is contradicting. So you should be having one person, one contact person to handle the KRA team. Resolve as many issues as possible during the audit process. Yes, all the issues that they have been brought up, make sure that you have responded to them and you have resolved them, and you have the final findings from KRA as the process is coming to an end. Make sure you have the final findings and all those highlighted issues, they have been resolved completely. Then you ensure you receive an official letter of findings from the KRA. Yeah, so as the audit process is coming to an end, don't just close the case by word of mouth. Make sure that you have received an official letter with the findings of that KRA case, so that even at a given time, maybe there is change of an officer who is handling your issue, you have a document which you can provide to them showing this is the audit that was done, and these are the findings that were communicated to us and how the issue was. So then you have to pay any taxes which are not in dispute. So maybe they were verifying the under declaration of the salary and wages or the pay tax in the payroll. After you have done you have responded to the issue, you find that you were on the wrong and you're expected to pay 100,000. So make sure that you have paid that tax, which is not in dispute, to avoid the accruing interest, which will be costly for your company. So those are the actions you're supposed to take during an audit, and always engage your tax experts so that they can be in a position to assist you in handling that exercise. We have some of the mistakes that we do as the taxpayer during the KRA audit. Number one is panicking. Once you receive that letter from KRA, don't panic. The things they are requesting from you, they are things that you have in your company. So don't panic, be there, be confident, and be in a position to communicate to them effectively so that even you cannot contradict yourself. Then you have the other mistake is call or go to KRA in anger. KRA they are very friendly. So don't go to them in anger because you have seen a claim in their letter. You have declared yourself by 10 million, and you know that you did full disclosure of those sales. So don't go to them in anger. Approach them in a friendly manner, and we'll talk one-on-one and handle the issue. Not consulting a tax advisor. You find that you have received that letter, but you don't know what to do next. You're not aware even of the tax implications that will result from that audit. Then you proceed to visit KRA. So at the end of the day, you'll be in a hot mess. So you need to engage a tax expert. Come talk to LWK. I've received this letter. How do I go about it? And we'll be in a position to assist you in handling that case. So always engage an expert. Assuming the letters of audit, you have received that email from KRA. Maybe you have even been summoned to go to KRA, or you have received the letter for notice of verification. You assume that letter and say, you are Chaikai. So that one is also another mistake that we do, because KRA will go ahead and issue a judgment. They'll issue an assessment, maybe demanding too much tax from you, and it resulted from you assuming that letter. You should receive that letter, confirm that you have received, and issue all the documents that they require from you so that you can handle that issue amicably. Then we have not conducting a tax risk assessment before audit. we said that the actions that you're supposed to take. Once you have received that letter, conduct an audit. Do a compliance check to see your tax position. Even before the audit begins, you are aware of this is what I'm expected, what will happen. So failure to do that, it's a mistake and it will cost you a lot. Then we have conversing. You have received the letter, you go ahead, meet that person in KRA and offer whatever you want to offer so that the letter can be pulled out. So that one is a mistake. Let's avoid doing that thing and ensure that these cases are being handled effectively in the KRA and get that tax advisor, and they are going to handle that case. They're going to assist you and you're going to come out even with no tax to pay. Maybe you are demanded to pay 10 million. You may find yourself even paying 100,000. So let's do the right thing in case of the KRA audits. So we have the role of the tax advisor. So you have received that letter and you have then engaged the tax advisor or a tax expert. So these are the roles of that person. So one thing is to conduct a periodic tax compliance check. So you have received that letter, you have engaged RWK as your tax expert or your tax advisor. So our role number one is to do a compliance check for you. We have to do a proper analysis in your taxes to see the position that you are in. Then we have to interpret changes in tax. So any tax changes that will happen, we need to interpret and communicate to them as the taxpayer. Conducting tax risk assessment before an audit. Yeah, we need to do that as the tax advisor. We need to do an assessment for the tax risk before even the KRA audit is being done, being available during the audit. So in this case, you as a taxpayer, you'll be at the back seat. Your tax advisor is the one who will be available. He's a representative of RWK and Associate Company, which is having a case. So this, in case KRA wants RWK to appear, this tax advisor is the one who is appearing on your behalf. They'll be available. In case of a meeting, you'll be going with them. They'll be representing you because they have a proper understanding and knowledge of those taxes. Ensure successful closure of the audit with fair assessment. So that is the role of your advisor. Once you engage that tax person, make sure that the judgment was done fairly and there is a closure of that audit process and you have received the tax finding from the KRA case. They should help resolve any tax disputes. Yeah, that's the work of the tax advisor. Then tax training to enhance operation. They should ensure that they train the taxpayer and the team on the changes in the tax to equip them with the knowledge on how to handle the tax issues that are coming up. Then we have tax planning. Yeah, so that's the role of the tax advisor that we engage as a taxpayer. So we have the other aspect of solving the tax disputes. So the tax disputes. So basically they start when you receive the decision from KRA. So you have received this letter with an intention to verify your document. They have done that. Then they issue a decision. They say that RWK needs to pay 10 million. So that's where the resolving tax dispute begins. So objection allowed if commissioner not made the decision within 30 days. So once they have issued the decision, that's the starting point. You can object that decision. Then we have the taxpayer aggrieved by objection, decision appealed to TOT. So the commission did a decision and you're not comfortable, you're not satisfied with that decision. You can go ahead to appeal to the TAT, that is the tax tribunal, tax appeal tribunal. Then taxpayer have a right to appeal to High Court if dissatisfied with the decision of the TAT. So the starting point, the commissioner made this decision. You are not satisfied with it. So you proceed to appeal to the tax appeal tribunal. Then they make a decision after various discussion, various different meetings. They'll come up with a decision. Then you feel as a taxpayer, you're not satisfied with the decision from the tribunal. What do you need to do? You should appeal to the High Court. You have that right to do that. Then you're supposed to use the ADR mechanism. There is the alternative dispute resolving mechanism. You have a right to use that. So we have a process of the KRA audit process, how it begins to the end. So step number one, the notice of intention to audit is issued. This is the point whereby you receive an email from KRA with the notice to audit your taxes. They want to verify the sales that you have declared. Maybe the payroll was the issue, or even you can find them talking about the gross profit. Your gross profit margin from the year 2021 to date, it has variances. What they compare with the industry trends, we talked about the trend, they come up with a decision to want to verify whatever you have. So they'll issue an email with a notice of an intention to verify your documents. They issue that through the email. The next step after issuing that, if the KRA audit is done, basing on that notice, basing on what document they require from you, you're supposed to provide the details to KRA, and they'll audit the bank statement, the invoices against whatever you have declared in your returns. So they conduct the audit. Then tax demand is issued on instance of non-compliance. So out of this audit, they'll verify the document they have requested from you. Maybe it's the bank statement, the sales invoices. Then they compare the amount you have received in the bank is 10 million against 5 million you declared as your returns. So they'll issue an assessment. Once the audit is done, they'll issue an assessment. This is whatever you have found, they issue an assessment because you have not complied, you have not declared all your sales, and they will go ahead to demand the taxes resulting from that audit. So after they have issued a demand, the taxpayer objects to the demand. So you have they have issued a demand. They expect you to pay 10 million. And out of your own assessment, you feel this is not fair. You're not satisfied with that judgment. So what happens? You have a right as a taxpayer to object this demand. You are objecting them demanding 10 million. Give your reasons as to why you are objecting. Maybe they said you never supported the expenses that you claimed. Give your reasons. I have provided the invoices and they fully support the claimed expenses. So have proper and valid reasons when objecting this demand. So once you have objected, there is a period. We have a period of 60 days. So KRA can either accept that objection or reject. Once they accept, they will amend. They'll amend the assessment they had done. Initially, the assessment was there demanding you 10 million, but basing on the maybe evidence that you have supported, they'll amend that maybe the tax in dispute was just 1 million. So your current position will be demanding 1 million. So once KRA have accepted that objection, they have 30 days to issue a notice of appeal to the tax appeal tribunal. So in case you objected and they have rejected that objection, no, you need to go ahead. You are not satisfied with the decision. They have objected and you're not satisfied. You need to proceed to the tax appeal tribunal. So after 30 days, you'll get an issue of notice of appeal to the TAT. So after that, after the notice is issued for the appeal, you have 2 weeks, a period of 14 days, for you to provide documents to the tax appeal tribunal. And the tax appeal tribunal is one of the ADR. It's an alternative dispute resolution method. So they'll do the verification appeal and the documents that you have provided. Then they'll issue the decisions. If at all you're not satisfied with that, you go ahead to appeal to the High Court. So the tax appeal tribunal was an alternative dispute method or resolution, but now you're not satisfied with that, you go ahead to appeal to the High Court. Then the High Court will look at the case, they'll do their own judgment. If at all it is not possible, or rather the judgment will still uphold their judgment, they demand we say 10 million from you, that still remains to be the judgment, you can proceed to appeal to the Court of Appeal. You have another 30 days to appeal in the Court of Appeal on that judgment. So basically that's the KRA audit process, and now we have the appeal process which gets to the Court of Appeal. So, and that brings us to the end of our topics today on the taxation of the SACCO microfinance. We had the different contents that we have handled. So that's the end of that at the KRA audit appeal process. So in case of any query, make sure that you raise in the chat box and it will get to be responded. And I believe we are still registering in the attendance form that was issued in the chat box. Make sure you don't leave this meeting without registering there. So we have an offer as LWK. We have an offer which is ongoing for the tax health check. This is where we come and do a compliance check on your taxes. We check on the tax obligations that we have for the past 2 years. We handle or issue advices on any pending tax issues. We give a report on the findings on the recommendation. Out of the tax check that we have conducted, we have found the tax issues that we have. They have the tax implication. So we'll provide a report to you with the findings and the recommendation. So the offer is still ongoing. It's a special offer at a charge of 10,000 for the company, and it will entail the tax health check for the last 2 years for your company. So we can make use of this offer so that we can get to know our tax position. Let's check our tax compliance. Are we complying with the tax laws that we have? So we can utilize that chance to utilize that offer. So you can communicate to us in case you feel that you can take this offer. Communicate to us using our number that we have given there and also our email address, and we are going to respond to you. Then we have another upcoming event. We have a masterclass taxation masterclass. It's a 2-week comprehensive online tax training happening next month from 14th to 25th. And we're going to do it online from 7 to 9 p.m. And the charges are 20,000. We have a certificate available, and you will get CPD points to the ISPAC member. So if you are an ISPAC member, so there is that benefit once you enroll with us. So you can register for this taxation masterclass. So currently we have an audit masterclass ongoing, and I believe some of us who are in this meeting, they are part of the classes, and they can attest they are learning something. So let's make use of this chance and register for this taxation masterclass coming next month from 14th to 25th. So you can communicate to us regarding the same using our number and our email address. We also have another event. We have a webinar on 20th, this coming Friday, on enhancing internal controls to save on tax. It will be from 10 a.m. to 12, Friday 20th. Yeah, so we are going to learn more on enhancing internal controls to save on tax. So mark that date on 20th, Friday. Yeah, and you can register for that. Then another event on 21st, that is Saturday. We have a skill up mentorship program whereby we train to equip the community with skills. So on this Saturday, we are going to train on bar soap and powder soap and dishwashing paste making. So you are going to get these skills on how to make bar soap, the powder soap, and the dishwashing paste. So it's a free event. Come and learn. So it will be on Saturday 21st from 10 to 12 at our Vika office that is located in Westmill Concrete, opposite Mangu High School. So you can still inquire more on the same using the number given there. So the skill up mentorship is part of RWK in the Westmill Concrete. So you can come and join us and get these skills. So we have a calendar there. So today, on being date 18th, we have handled the taxation of Saccos and Microfinance Industry. Then tomorrow, 19th, we have a CEO breakfast meeting to be held at DTB Center, Mombasa Road. It's free of charge. So the CEOs who are with us, you can register with us and come and learn more. Yeah, so it's open for the CEO. So if you are a CEO and you are in this meeting, you can join us tomorrow from 9 to 1 at DTB Center. So this event will be brought to you by LWK in partnership with DTB Bank. So that's the venue, DTB Center, Mombasa Road, from 9 to 1. The CEO we so if getting so we internal so our services is okay. These are the services that we have. We have the audit services. We offer those services. We have the statutory audits, internal audits, accounting system audits, project management audit, financial statement audit, forensic audit, and the tax compliance audit. If your company requires any of the services under the audit, you can contact us and we're going to offer that service at a very affordable price and deliver quality services to you. So in case you are interested in any of those audit services, feel free to reach to us. Then we have the bookkeeping services. It involves the management report, filing of the monthly returns, that the VAT, PS1, NHIF, and SSF, bank reconciliation, payroll, accounts payable and receivable, trial balance, reconciliation, cash flow, forecasting, cost management, break-even analysis, budget to actual report. So those are the services under our bookkeeping department. So in case you are interested in any of the service, feel free to reach out to us and we're going to engage. Then on the tax services, we all know that LWK is a leading firm in the tax services. So our tax services are as follows. We have the tax returns, the VAT, rental, PS1, capital gains, withholding taxes, and some other tax that we have not handled today, which never related to the SACCO. But if you're operating in another company, operating in a different nature, and you may require these tax services, you can reach to us. We have the tax health check. We have issued the offer that we have currently. We have the tax refund processes, tax planning, representation at KRA on different tax issues, the KRA audit process. Currently, the KRA audit is happening. We are receiving letters every day as the taxpayers, so you can engage us for that service. Advisory on tax implication on various transactions and tax training. So apart from the masterclass that are happening, we also offer tax trainings which are custom made. Whichever aspect that you want to be trained, you can communicate to us and make arrangement on the same. Then we have the internal audit department. The internal audit department, it handles the accounting system audit, bank reconciliation, internal control processes, tax health check is still part of that, management reports and governance reports, payroll review, procurement processes, payable and receivable, cash flow projection, budget and action report. So if at all, even you don't have an internal audit department in your company, and you want to get these services, we offer that at a very friendly cost and affordable. You can reach to us. We have our numbers, our email, and even you can visit our offices. Yeah. Then we have the financial consulting. So our team of experienced accountants and tax consultants, we offer those wide range of services. The ones that we have talked about, the audit, the taxes, the bookkeeping. So we offer all those services. In case you need any, feel free to reach to us. Excuse me. We still have the advisory services. So apart from the audit, bookkeeping, the taxation, we offer advisory services on the process and the operation enhancement, system setup and review, inventory management, debt management, debtors and creditors management, financial management, performance management, and accounting structures. So in case you need any of those services, feel free to reach to us. So we have offices. So as LWK, we have 2 offices. We have the Thika branch. So Thika, it's along Thika Road opposite Mangu High School. So that's where our office is located. Then we have an office in Nairobi Westlands, along Westlands Road, gate 83. That's our Nairobi office. So you are free to come visit us any day, anytime. You're going to find us there in any of those offices. Then we have a partner, Regina Kingori. So today she was not in. Today I was representing her to handle this topic. Yeah, and that those are our contacts. So in case you want to contact us, we have our number there and our email. Feel free to engage us. Even for consultations, you can visit our social media pages and book an online consultation with us. In case you have any query, any consultation that you want to do, visit our page and book a consultation with us, and we're going to respond that free of charge. Yeah, so that's all for today. In case you have any question that was not responded, we can have maybe 5 minutes to respond to that before we end our session. So I believe the questions were being answered in the chat box. So in case you feel you have any questions that was not answered, you can still reach out to us even after this session. But I can see my colleague was answering your questions. So make sure that you sign in the attendance sheet that will be shared to you. Ensure that you sign there. So I can see the attendance list has been shared. Make sure that you don't leave the meeting before you sign in. You sign in that register. And let's plan to attend. If you are a CEO and you are here, let's plan to attend to that event tomorrow. We are going to learn more and get more exposure and knowledge of the taxes. It's free of charge from 9 to 1. So let's purpose to attend. And also we prepare to attend the Friday's webinar on the internal controls. So let's purpose to attend that. And also let's make use of the special offer that is ongoing on the tax health check. so that we can know our tax position and the level of compliance that we have.